Welcome to the Deep Dive, your shortcut to cutting through the noise and getting truly well-informed.
Glad to be diving in today.
Today, we're taking a deep dive into Fortrea Holdings, that's ticker FTRE, and their Q2 2025 results. These numbers dropped pre-market back on August 6th, 2025, and let's just say the market definitely had a reaction.
It certainly did.
Our mission today is to unpack exactly what drove that, what it means for the company, and crucially, what insights you should take away. Fortrea, for those who might be less familiar, is a relatively new player as an independent contract research organization, or CRO.
Right. Spun off from LabCorp, focusing squarely on clinical trial services.
So let's cut right to the chase and look at the headline numbers, because Fortrea delivered, well, a pretty robust quarter that certainly seemed to please the market.
Yeah, the top line was strong.
They reported adjusted EPS of 19 cents. That significantly beat the consensus estimate, which was only $8.
Quite a beat, yeah.
And revenue also came in strong at $710.3 million, comfortably surpassing the $631.5 million consensus. That shows a solid 7.2% year-over-year increase. So pretty impressive top-line beats, especially, considering the current market environment.
While that top-line performance was indeed impressive and definitely caught the market's attention, it's worth adding a few nuances to that snapshot. Adjusted EBITDA, for instance, remained relatively flat year-over-year. Came in at $54.9 million.
Okay, so flat EBITDA despite the revenue beat. Interesting.
Right. But on the other hand, the company is sitting on a substantial backlog. We're talking $7.55 billion. And that reflects a healthy 2.5% increase year over year. So this backlog provides, significant multi-quarter visibility.
That's a key metric for CROs, that backlog.
Absolutely. And beyond the numbers, this quarter also saw a really pivotal leadership change, with Anshul Thakral stepping in as the new CEO. So you're looking at a company with strong reported results, but also one undergoing a pretty significant transition.
Okay, let's unpack this then and really get into the nitty-gritty of Fortrea's Q2. First, that eye-catching EPS beat. Looks great on paper, $0.19 versus $0.08. But can you walk us through the financial mechanics, any nuances behind that adjusted number?
Absolutely. So the adjusted net income for Q2 was $17.6 million. That directly translated to that 918 adjusted EPS figure you mentioned. What's crucial for you to understand, though, especially when looking at the full picture, is how that differs from their GAAP results.
Ah, the GAAP numbers. Always important to check those.
Exactly. Those included a large non-cash goodwill impairment charge, $39.1 million, specifically related to their clinical development unit.
Okay, non-cash, but still a big number. What drove that impairment?
Yeah, it was primarily due to a decline in their share price and also an increased discount rate they use for valuation purposes. So, like you said, it's not a cash outflow, but it did lead to a GAAP net loss for the quarter. So while the adjusted numbers tell a story of, let's say, operational strength, the GAAP figures reflect that necessary accounting adjustment hitting the balance sheet.
Got it. So a clean adjusted beat. Great for the headline, but we need to remember those non-cash items messing with the GAAP picture. Makes sense. Beyond the financial optics then, what were the operational drivers? What really supported these numbers? Where did that revenue growth actually come from?
Operationally, the revenue growth was primarily fueled by a strong increase in their clinical pharmacology reporting unit.
Okay, clinical pharmacology.
Right. In contrast, their clinical development revenue was relatively flat.
Flat there. Okay.
And that substantial backlog we mentioned, $7.55 billion, that continues to be a key indicator, obviously, provides excellent multi-quarter visibility and predictability for future revenue streams. However, one detail that management addressed directly, and one that definitely caught some attention, was the book-to-bill ratio for the quarter. It came in at 0.79x.
0.79. That's below 1.0. That's definitely a key point for any CRO, right?
Yeah.
Signals a contraction in new business for the quarter.
It does.
Management attributed this to mix and timing headwinds and also some customer hesitancy during the CEO transition, particularly with new biotech clients. But is that explanation really robust, or could there be deeper, maybe more systemic issues at play in the market, especially for those new biotech customers?
That's a really excellent question to ask. Management was, I'd say, quite clear on the earnings call.
Oh.
While the quarterly book-to-bill of 0.79x is, lower than ideal, the trailing 12 months, the TTM book-to-bill, stands at a much healthier 1.1x.
Okay, 1.1x TTM is better context.
Exactly. They emphasized that the Q2 softness was indeed tied to timing, specific project mix, and importantly, that CEO leadership transition. They explicitly stated they've seen similar patterns before the spinoff, actually, where a change in leadership created this brief period of uncertainty. that then quickly dissipated once stability was reestablished and, the focus on delivery remained strong. So they seem confident this isn't a systemic market issue, but more of a temporary effect of the transition. Especially, as you mentioned, new biotech clients tend to be maybe more sensitive to perceived instability when they're making big commitments for their RFPs, their requests for proposal.
That focus on managing customer sentiment during a leadership change is clear. But how does this intersect with their broader strategy for, navigating the current environment? What are they doing on the cost management side? And are they balancing this with growth and innovation too?
Indeed, it seems like a multi-pronged approach. The company is actively executing on cost discipline and margin optimization initiatives. They're targeting a pretty ambitious $150 million in gross cost reductions for 2025.
Wow, $150 million gross. That's significant.
It is. And they've already captured over $50 million of that in the first half. That resulted in about $30 million in net savings, contributing directly to adjusted EBITDA.
Okay, so real savings hitting the bottom line.
Yes, and this has involved a significant reduction in permanent headcount, over 8% over the last 12 months. They've also seen big reductions in SG&A, partly due to lower transition services agreement costs, the TSA cost, and IT-related costs now that they're post-spin.
Makes sense, those post-spin synergies kicking in.
Right. And on the operational efficiency front, they highlighted positive operating cash flow, $21.8 million for the quarter, and also an improvement in day sales outstanding, DSO, by 5 days sequentially.
The DSO improvement is good news. That suggests progress on those ERP transition invoicing delays we heard about earlier.
Exactly. Indicates real progress there. So yes, they are absolutely focused on both cost control and operational improvement. Tightening the belt, as you might say.
Good to see them tightening the belt and optimizing processes. But you mentioned innovation earlier. Peter Neupert, the chairman, he highlighted their Accelerate software platform. What's truly exciting about this? What does it mean for their competitive advantage, or maybe even the broader CRO industry?
Yeah, that's where it gets really interesting, I think. They seem to be genuinely investing in innovation, specifically in that Accelerate software platform. They introduced 3 new modules this quarter, and one notable example is called Risk Radar.
Risk Radar. Okay.
And this isn't just some fancy name. It's apparently an AI-powered agent designed to dramatically enhance risk-based quality management in clinical trials.
AI-powered. How does that work?
Well, it uses AI and machine learning to automate risk identification and then suggest mitigation strategies. The aim is to reduce manual effort, improve operational efficiency, and importantly, significantly strengthen patient safety protections.
That sounds potentially game-changing.
For the industry, yeah, it could mean faster, safer, and potentially more cost-effective clinical trials. For Fortrea specifically, it's a potential differentiator. Positions them perhaps at the forefront of leveraging AI for a really critical aspect of drug development. It could offer a tangible competitive edge, both in terms of quality and efficiency.
That's a powerful statement about how AI is starting to transform even these really complex sectors. Now, let's circle back to that new leadership. Anshul Thakral officially started as CEO just days before the call. Beyond his impressive background, what did management actually say about his immediate strategic focus? What challenges, what opportunities does he walk into, and what does the market need to see from him first, do you think?
All right, Anshul Thakral officially started August 4th, literally just before the earnings call. Talking about jumping in the deep end. He brings, as you said, extensive experience in life sciences and the CRO industry, not just as an executive, but also, interestingly, as a former customer.
That dual perspective is valuable.
Very valuable. And he's noted for a proven track record of, building companies and delivering profitable growth. His immediate focus, as stated on the call, will be engaging with customers and colleagues globally, which basically translates into a clear aim to sharpen commercial focus and accelerate award intake, especially as biotech budgets hopefully normalize.
So addressing that book-to-bill softness head on.
Exactly.
Yeah.
The market will be watching very closely for early signs that he's effectively tackling that Q2 book-to-bill dip, particularly among those new biotech clients. The opportunity is clearly there to re-energize commercial efforts. The challenge is doing it quickly and visibly. And Peter Neupert, the former interim CEO, he remains on the board as chair, which does provide some continuity during this critical transition period.
Okay, good context there.
Now, if we connect all this to the bigger picture for investors, the Q2 performance really indicates a significant narrative shift for Fortrea. It seems they're moving from what management themselves termed a period of triage post-spin to one of measured stabilization.
That's a powerful framing. Okay, for someone who hasn't been tracking Fortrea super closely since the spinoff, what exactly did triage look like in practice for a CRO? And maybe more importantly, what specific evidence are we seeing now that this stabilization is genuine and, not just temporary?
Good question. During that triage phase, right after the spinoff, Fortrea faced pretty significant operational challenges, the kind common to such large separations. Think about untangling complex IT systems, establishing fully independent processes, navigating customer uncertainties that always come with such a big transition.
Right, the messy part.
Exactly. For a CRO, this often means potential disruptions in project execution, maybe invoicing delays, slower than desired new business wins as people wait and see. The evidence now for measured stabilization comes from several areas we've actually already touched on. Those consistent revenue beats, the capture of significant cost reductions we talked about, the positive operating cash flow, and especially that improvement in DSO, the days sales outstanding.
Okay, tangible improvements.
Right. These are all indicators that the fundamental operational kinks are being worked out, and the company is moving towards a more predictable, independent footing. It suggests they've successfully navigated those immediate post-spin complexities and are now building a more stable foundation.
That paints a much clearer picture, thanks. But if they're raising their full year 2025 revenue guidance now $2.6 billion to $2.7 billion, yet they're reaffirming their adjusted EBITDA outlook at $170 million to $200 million, what does that really tell us about the underlying quality of their business? And I guess, how much heavy lifting are those cost cuts really doing?
Yeah, that definitely raises an important question for you as an investor. It strongly suggests that while they anticipate higher top-line growth, ongoing and frankly, rigorous cost discipline is absolutely necessary to maintain their margin targets.
So growth, but margin-focused growth.
Precisely. The flat EBITDA guidance, despite higher revenue expectations, implies that any revenue mix pressures or maybe additional investments needed for growth are being offset by these aggressive cost reduction initiatives. Management specifically noted that SG&A savings are more heavily weighted towards the second half of the year, which could impact the flow-through to EBITDA in the nearer term. So yes, while growth seems to be returning, it's very much a margin-conscious growth, heavily relying on their efficiency program to protect profitability. Those cost cuts are definitely doing a lot of the heavy lifting right now.
Understood. And circling back one more time to that quarterly book-to-bill ratio, the 0.79x, we discussed management's explanation timing, mix, CEO transition, but given the broader market and that flat EBITDA guidance, should we still be wary? Is there any indication this could signal a deeper, more systemic issue, either within the broader CRO market or maybe Fortrea's competitive position specifically?
Well, a sub 1.0x book-to-bill for a quarter always warrants scrutiny, no doubt about it. But management's detailed explanation, plus the context of that 1.1x trailing 12 months ratio, are pretty key here. They maintain the Q2 softness was primarily tied to those factors. Timing, mix, and the CEO transition impacting new biotech wins. Not, they insist, a systemic market issue.
And they've seen it before, you said.
They explicitly stated they've seen similar temporary patterns before. And in the broader CRO market, while, yes, there have been some headwinds for certain segments, the overall demand environment, both from large pharma and biotech, actually seems to be showing upward trends in RFP pipelines. That's request for proposal pipelines.
So the overall demand picture is okay, maybe even improving.
It seems so. So while 0.79x is a number to watch very closely in Q3, Fortrea's specific commentary points away from a systemic problem and more towards those unique, albeit hopefully temporary, company-specific factors.
Okay. Speaking of market headwinds, though, what about cancellation rates? We've certainly heard some concerns from other players in the CRO space about maybe increasing cancellations. Did Fortrea address this, and how do they compare?
Yeah, they did address it. And Fortrea's commentary on cancellations was actually quite encouraging, and it provides a bit of a differentiation point. They reported that cancellations remained in line with their historical relatively low trends and were even slightly lower than in Q1.
Lower than Q1. That's positive.
It is. They attribute this resilience partly to their specific market exposure. Notably, they mentioned not doing government or vaccine-related work.
Ah, okay. Less exposure to those potentially volatile areas.
Exactly. And they also mentioned a conservative bookings policy. This contrasts favorably with some peers who have faced headwinds in those specific government or vaccine-related segments. It suggests Fortrea's book of business might be inherently a bit more stable and less prone to those sudden large-scale cancellations. It's subtle, maybe, but a significant potential advantage.
That's a really good point. So with all these moving pieces, strong Q2 results, a brand new CEO, a potentially recovering market backdrop, what's on the catalyst map for Fortrea as we look forward, especially under this new leadership? What should our listeners really be watching for?
Key catalysts for you to watch will definitely include the Q3 order intake and, crucially, that updated book-to-bill ratio.
The first real test for the new CEO's impact.
Absolutely. This will provide the first real proof points from his go-to-market adjustments and show if that hesitancy they talked about has truly dissipated. Also, the overall tone of biotech funding and the flow of phase 2 and phase 3 RFPs, that will be critical context for the broader market they operate in.
Right, the macro environment.
And then, of course, any clear margin or free cash flow inflection coming from their ongoing cost programs, that will be closely monitored. The underlying demand environment, as we said, both from large pharma and biotech, is showing some upward trends in those RFP pipelines, which is a positive signal. But now it's really about Fortrea's ability to capture that demand efficiently under this new leadership. Execution is key.
Execution, right.
Mm-hmm.
Okay, let's shift gears. It's time for our This Is Not Financial Advice segment. Let's put on our speculative hedge fund analyst hats for a moment. Given Fortrea's Q2 earnings, the new CEO, those nuanced bookings figures, what's a wild yet plausible trade idea?
Okay, here's a scenario to maybe consider. Remember, absolutely not financial advice.
Definitely not. Purely hypothetical.
Purely hypothetical. How about a short-term, maybe aggressive long position on FTRE?
Okay, long FTRE. What's the thesis?
The thesis centers on something we just talked about, the potential immediate impact of the new CEO, Anshul Thakral. The fascinating insight here is how quickly the market sometimes underprices the, let's call it the human element of leadership transitions. It can create a brief, maybe actionable window.
Interesting angle. Go on.
Management explicitly stated, remember, that win rates for new biotech customers declined due to customer hesitancy during the leadership transition. But they also highlighted that this kind of thing quickly dissipated after previous leadership changes they'd experienced.
Right. They said it bounced back quickly before.
Exactly. So the bet is that Anshul Thakral's deep industry experience, his strong customer relationships, his stated focus on re-engaging customers globally could lead to a rapid re-acceleration of net new awards, specifically from those hesitant new biotech clients. You'd be betting on a swift rebound in the quarterly book-to-bill ratio, pushing it back above 1.0x, maybe even in Q3 or Q4.
So you're essentially front-running the market's realization that the leadership uncertainty was temporary.
Precisely. This trade anticipates the market fully pricing in the turnaround and new business wins even faster than perhaps currently expected, creating an opportunity for a swift upward movement on the stock driven by that renewed booking momentum. It's about betting on the market, quickly re-rating what might just be perceived as temporary leadership uncertainty faster than most anticipated.
Yeah, that's a truly thought-provoking take, playing the sentiment shift around the new CEO and the potential for a quick booking recovery. Fascinating. Okay, so to recap our deep dive today, Fortrea Holdings delivered a strong Q2 with beats on both adjusted EPS and revenue. They demonstrated effective cost management and clear operational improvements moving towards stabilization.
Sure.
However, the market will be closely watching how the new CEO, Anshul Thakral, drives that re-acceleration in new business wins, particularly as that quarterly book-to-bill really needs to regain consistent momentum above 1.0x.
Exactly. The company appears, reasonably well positioned. Solid liquidity, a clear path for operational and financial improvement seems laid out. They've laid the groundwork for stabilization, but the focus will decidedly shift now to execution under new leadership to truly accelerate what they're calling their build phase.
Execution is the name of the game now. As always, the information we've discussed today is purely for informational purposes and is absolutely not financial advice.
Please do your own research.
We strongly encourage you to do your own research and due diligence before making any investment decisions. Thank you for tuning in to the deep dive. We hope this exploration into Fortrea's earnings call helps you stay well informed and perhaps gives you something interesting to think about regarding how quickly market sentiment can truly shift with effective new leadership potentially at the helm.